Good afternoon. Ira Epstein of Linn & Associates with your metals market wrap-up for this Thursday. And we're at August 20th, 2020, about 5:10 in the afternoon. That is Central Time. So we've just opened. You can see follow through to the upside in the stock indices. Today was one of those whipsaw days. You actually broke enough in the S&P to get the market out of the pattern of higher lows, higher highs, but at the end of the day it rescued itself, kept the embedded reading, and things are looking pretty strong. In the metal markets, was that the washout? It may well have been. I'd be very cautious in this market about pressing it either way at this point. It seems to want to consolidate. Now, silver didn't break enough to do a lot of damage to the charts. You'll notice that the euro is moving higher tonight. I wouldn't be surprised if the dollar, if we peaked out at this area. I'll show you this on the charts in 1 minute. And bonds and notes, well, they're just waffling right here back and forth. So, as you can see, for the gold for the week, we're down $3. It's felt like a lot worse than that, to be honest with you. But as of this moment, it's down $3 for the week. When we take a look at the bar chart, you can see what I mean. You had this rally. Remember, this is the rally peak was made this Tuesday as the market hit 2024.60, and then the market let go 1930.5, 1928.90, and giving you a little bit of a bounce. So I'm going to repeat what I said. I think we're caught from that high to that low, and the market's in the middle of no man's land. The market has also got a pattern now of a lower low and a higher high. That is not a trend. The next thing, the market is back underneath the 18-day moving average of closes, so that gives the bias down. When you look at the Bollinger Band, supports in the market near the 1915.60 level with resistance at 1990. Again, I don't see a trend. And momentum sort of waffling here, still pointing basically down, not up, even though the market tonight is $10 higher. When we look at the gold-silver ratio, what's still clear is that the silver market is gaining on the gold market. And as I said, the silver market's got a cleaner chart. We still have the pattern of higher lows, higher highs. Momentum here has been gradually pointing to the downside, nothing in a big way, but it hasn't even come down to challenge the 18-day average. And if it did right now, that number is still above the last break low of 26.68.5. So I would look for the pros, if it just fell there, to still be supporting the market, but I don't think they give the market a lot of quarter. If you got under the 26.68 level, they might just disappear on you. Not selling, they might just everybody go to the sidelines. In the copper market, getting up into the 303 area is a little high. That's what the market's telling us. It fell back, if you'll take a look today, some nearly 5 cents. First challenge of the upper Bollinger Band, what did the market do? It rejects it, and that's what I teach. It often does that. Now the question is, with an overbought market, with a pattern of a lower low and a higher high, is there anything to do? I don't see it, but that doesn't mean I'm right. I can see the vertical price rise. I can see the bias is up, but I also see an overbought market. In the platinum market, I don't see a trend. I see a market with a higher high, lower low. So we've entered that waffling period where you're doing sort of this, back and forth, and trying to make something out of nothing. Well, you'll end up with more problem on your hand. You'll get something. You probably won't like the result. Let the market straighten itself out and tell us what they want to be. In the palladium market, it seems to just be locked in on this 18-day average of closes. Every day, practically, it hits it. Doesn't go up, doesn't go down, just sort of sits there. Okay, I can live with that. While the swing line is up, the bias is down and prices are trading under the 18-day average. Momentum is flat to pointing slightly lower. In the dollar index, all that we did on this, we got down, if you take a look, you hit the lower Bollinger Band. The market rallied, got out of an oversold condition right there, and it's still out of the oversold. The market hits the 18-day average of closes, and we don't know where we're at right now. I think the pros went short against that number this morning. The high was 24.5. They have a good lead, and it wouldn't surprise me if they're looking at the 92.44 level to see what kind of support, if any, shows up at that number. The question is, can this market break down again? The overall trend in the dollar index is still lower. So when I put it all together, one of the things that you might not have is all the tools that we offer people. Don't go away. This is our kit. It's going to be a link that we send you. It opens up and you get everything here. You're going to get a lot of money management ideas, brochures on technical analysis, the exchange brochure link. You can get into everything they have, and they put out a new course on options trading, by the way, for the mini futures, but it's really for the whole thing. Here's something that I think you should print out and put on your desk. These are the 14 typical chart patterns and what the market typically does within them. So just want to point them out. I don't see this around very often, and I think it's important. We also offer in this, if you haven't had a trial, to our charting software, to our app for your phone, in other words, iOS or Apple. It'll work on either of that. And then what you've got, the Android phones, of course, and then what you've got are my money management. Now, you just saw that brochure. That's M1, M2, M3. Paul Volcker came up and made that so important years ago, and we're starting to hear more and more talk about it. I guarantee most of you don't even know what it's about. The Fed does, and you'll start reading. The M2 is doing this. You're going to have to go look for it. We give you what happens if it goes up, if it goes down, and we try to teach from there. The last thing, if you haven't tried my advisory services, any of them, give it a try. Go to our website, sign up for a free trial. Some of you say, and I've seen it on YouTube, do you offer a free trial? I do offer a free trial. So if you haven't tried the ETF one, the full research for my futures, the video only for the research, you can try any way that you'd want one time. It's not about, oh, I'm going to keep giving you different ones all the time. I won't do that. I'm running a business. One last thing I'd like you to do. Tell your friends about this channel. It's not a secret. I'd like more viewership. I think we do something most of the future sites don't do. And if you're a regular here, I think you'll see we do it better than most. So there are some good ones out there. I think we're amongst the top. I'm Ira. You have a great day. I'll see you tomorrow.